everyone, welcome back. In this video, we will discuss about volume and open interest, which is almost a similar concept to the volume. Now, what we have said you that there are three most important aspects of technical analysis, or three pillars on which the discipline of technical analysis is built on. And these three aspects are time, price, and the third is volume. What is volume? Suppose I sell a share and you buy a share. So there is a transaction. One share is changing hand. The transaction value of volume is 1, not 2, because 2 people are involved. So we only take the one-sided transaction value. So when we talk about volume of a share or a contract, it is the number of contracts that changes hand during a particular period of time. It is not two-sided. Now, when we are talking about volume, absolutely the volume doesn't mean anything. The volume is always taken in context of average volume. Suppose a share or an equity or a contract is having 2 lakh or 3 lakh or 4 lakh volume on an average, and suddenly on a particular day we see a 10 lakh volume in that contract, then there is a concern or there is an opportunity that the volume is signifying something. And what volume signifies is the intensity of a move. Suppose we are already in an up move and the volume suddenly increases, we see high volume, then the possibility is that the intensity of the up move would be higher and the prices may go much higher and the uptrend may sustain. Similarly, suppose we are going on the upward direction and we find that volume reduces over the period of time, then the uptrend may be near about pause because people are not participating in the up move. And that's why the price action may go sideways or even turn bearish. Similarly, when we are talking about a downtrend, if the price is falling and we see the volume is also increasing, then the possibility is there that the prices may go down much lower and the downtrend may sustain. On the other hand, during the downtrend, if we find that the volume is reducing, then there is a possibility that the downtrend may end, there may be sideways movement or a reversal. Market may turn actually bullish. Now, look at the Nifty chart here. Here you can see how we plot the volume in the chart. It is plotted as a subgraph. When we mean subgraph, that is below the time and the price axis, you can see the volume. Now, volume can be counted for any time period like price and time. So, if we are talking about a daily chart, we will see that the volume of each day. Suppose we are looking at a 15 minutes chart and we see quite high volume in a particular 15-minute period compared to the previous period, then the activity in that stock may increase during that part of the day. So volume is not only important in the context of a daily chart, it is also quite important in the context of particular periods of a day. Now, when we talk about volume, it is about the transaction volume that we have said, but there are few other aspects of volume too. Like, suppose someone buys a share and before closing of the day, he sells that share. So he is not carrying forward any share. But suppose he bought the share and carried forward that share. He didn't sell by the end of the day. And simultaneously someone would have sold the share and he had sold it completely, he didn't buy it back. So this is called a delivery buy or a delivery sell. So if the proportion of delivery buy or delivery sell compared to the total transactions of the day goes higher, then the possibility is that a particular price movement may continue and it has some belief or some real forceful investors are entering or exiting the trade. Like suppose we see that the stock of Reliance is going up. Now the delivery volume goes up. What does it signify? That the price is going up because some people are buying that and not selling by the end of the day. So they are looking for much higher level. Suppose in the same stock we see that the price is going down and the delivery volume is high. So that means that some investors are exiting that stock and they are not buying it back by the end of the day. So either they are exiting the stock permanently or they expect the stock to go much lower and then buy back. So delivery volume, which is another aspect of volume, is always very important.